All right, welcome back. We're going to set up another trade plan. And now this is one of our 30 trades that we're doing an exercise for. We're planning 30 trades, making a plan for each one of them, and then executing that plan. And so I'm going to be doing little market structure exercises and lessons along the way. So today I want to give a practice that will allow you to see for yourself a little bit about how price moves and make some observations in your own experience. And it's very simple. So it's a trend line practice. Now, there's many, many, many ways to draw a trend line, and this is where we can get into a lot of trouble. We can draw from the bottoms to here to here, across the middle, across multiple pivots. So we need to make something objective, and there's no right or wrong absolute way. It's a matter of function. What are you drawing the line for? It's a matter of what are you after? What are you trying to do? And so we're going to identify one particular way to draw a trend line that's going to isolate certain behavior. And from there, you can make some observations about that. And I'll talk a little bit about making it functional for trading. So it's pretty simple. I've done some market structure lessons already, but let's just recap a few things. I put some definitions here. So if you're going to measure or draw, you have to have something objective. So we've got some objective definitions. A new high is going to confirm that swing low, right? A new high is going to confirm that swing low. I have these definitions over here, right? And vice versa if the market's going down. We have an impulse leg, we have a reaction leg. Now, what I'm calling a balanced or relative swing is when I'm getting same-sized reaction legs, right? Give or take, right? Give 15% either side. When they're give or take same-size reaction leg, I'll call that a relative swing. So those are our definitions. Now, the instructions for this exercise. Well, first, let's go over the objective. Number one is going to help you to structure a market, right? To isolate relative structures that are related to each other. So any time that you see a same size swing that makes a new high, what is that showing you, right? It's showing that you found some kind of organized behavior in the market. Somebody's buying at a certain percentage back. And once you've found that, you can follow that. And you can know when that changes. And so that's the purpose of same-size swings. We're not just going to draw any trend line. We're going to look for balanced swings that make new highs. The other objective is this is following, right? Rather than predicting the turn and all of that, and I feel this and I feel that, you learn to set yourself aside and follow the market, what it wants to do, not what you want to do. Because once you have an objective way to do this, facts are facts, no matter what. So you have a contrast to whatever you might be thinking or speculating. And, allow the practice to teach you, right? Teaching and learning isn't just following a set of rules, right? We want to learn something in our bones from this, in our own experience. All right, so the practice is pretty easy. Identify two confirmed swings. 1, 2. Basically, it has to make two highs. Once you do that, you just connect the bottoms. And then you follow price. Now, what happens if the market comes up here and makes another? Here, let's set up another one here. Makes another swing that's the same size, about the same size, right? Give or take 15% either side. We'll do some practice here in a minute. And then makes a new high. Well, then what you do is you always follow the last two. So this goes from here to now here. Okay, so you're always following the last two. The market is dictating to you. And then the next part of this is you can then simply just draw a box across the bottom of each one. Right? So rather than me telling you what this does, you're going to find out and you're going to see, right? Don't have any expectations, just observe. I don't need to justify things or techniques, right? This is going to show you how price interacts. And what we're doing, right, the main thing that makes this significant is that we're following isolated swings, some kind of organized volatility. And then we're going to learn to follow that continued behavior, and then we're going to know when it changes. So, for instance, I had done some posts when the market was coming off all of the last year. Everybody kept predicting the bottom, and all you had to do was follow the market, and it would tell you, right? It would tell you. So there's a lot to learn from this. So let's go do a little bit of this practice so you can see it. And we're just going to use this stock here. And the first part of this is to be able to frame a market, right? Frame the structure. So you see I even started it here for you. A new low confirms a swing high. So what we have here, sometimes it helps to draw the wave in if you don't see the structure. So we have this. So we have one of our lows. Now what we need is a swing about the same size and a new low. So this is relatively easy to check. If it's not the same size, you don't do anything. So let's, with a little practice, you start to see that all of this is a big swing structure, right? And then the next thing to check is, are the reaction legs the same? So we have two new lows. Now, are the reaction legs the same? So just draw. It doesn't have to be perfect. Right? And you come over here and give or take, 15% either side. So now we meet all of our instructions. We have two confirmed lows, 1, 2, and then it's just a matter of drawing and connecting the dots, like so. And then the next part of the practice is going to be just pick a box across the top of this one here, and don't expect it to do anything, just do it and observe. So this is trying to teach you something about the overall structure. So I could tell you one thing for sure. This was a hot stock, right? Going up. Everybody's predicting when it's going to turn. Once you find two confirmed swings, they are hitting it at this level and making new lows. Period. The end. That's the facts. And just because it changes doesn't mean it's permanent, but it's got to cross that line if it's going to change. And so this is following price. And then if and when it does cross that line, I want you to just make observations, right? How it crosses it. And, sometimes there's a tendency for it to come back and land on it again. Just make your own observations. Don't force things to be perfect, but you kind of get the idea how this tells you that, all right, the market ain't doing that no more. Period. The end. And then just draw these boxes and see, if and how they interact. So my observation here is, look, it plows through it. And then we got this upper box. So let's see what happens here. Right? You get a little bit of action in between and zoom through it. And you can do this anywhere, right? To see that these swings are all funky. But if you can isolate two same size swings, right, that make a new high, then you can draw a line and you'll know when that behavior changes, all right? And you can see the interaction. of these guys. And don't forget, you can do a little extra work by drawing a box. In practice, if I beat the second box, then I'm pretty sure the trend has changed for sure. So, that's just an idea, all right? First box is, all right, so you got the practice, easy enough. And it's just making observations. And let me show one more thing where this can be used very usefully, besides being able to know when a big downtrend is over, or at least when it's trying to transition. So the beauty about this objective method is once you have it, you can put it in different situations. Now, one of my favorite situations to put this in is, say, when a market's in an uptrend and it's pulling back, and I get one wave and I get another wave that are the same size. So now I'm taking the exercise and I'm using it very specifically in a reaction leg. So I can draw my line, and this will give me some indication of when this pullback might be over. Now, all pullbacks don't necessarily give you this organized volatility, do they? And so when you do see it organized, they're telling you something. They're saying, hey, we're hitting at about, this level. And if you go stop and you don't hit it there and you go through, okay, something has changed. And so I'll often use this as a way to think about getting into a swing, knowing that the downtrend in the reaction leg is over. All right, so that's just a little bit of function from it. But if you just do the exercise, you'll learn plenty. You'll learn to follow a market. You'll observe that often when a line is busted, it's forgotten about and it creeps back down it. All right, so that's just a following exercise. And then we have to, maybe create a method out of that and then structure it. So I'm going to structure a trade here. So now let's just go ahead and do our thing with our trade. So I'm just going to structure a trade plan. It has nothing to do with this exercise, by the way. This is just a swing trade. And, this is actually the main purpose of these videos is the planning. So let's plan a trade. It's helpful to already have built a template that has your method and everything, your position sizing, everything built into it. If I can get it going here. Okay. So you'll have the rules of your own method already worked out. Okay. And from there, it's just a matter of writing it down, right? Making a clear plan and then executing that plan. I know exactly where I'm going to enter. I know exactly my position sizing. I know exactly where I'm going to exit. I know exactly how I'm going to manage. I do not need to sweat the trade. My methods are built on all of these little market structure lessons I've been given. All right, so here I'm going to enter at the 50% of this reaction leg. I'm just going to let the market take me in. And then I'll put a stop at the 25%. And we'll shoot for 6-1. So let's just use our tool to help set up the order here. Let's get a good visual. I already know my position sizing. It's going to be 0.5% for each trade. Let's create an order off of this. So 772.92 is going to be the exact entry. The exact stop, right? We're becoming very precise in our actions. 70. And there's no, messing around with this after you've set the plan. That's the point, right? This is about learning discipline. All right, so we need shares now. So what I'm going to do, and this is also part of my practice. So now we're going to do the documentation. This is part of the documentation. And I also like to put these into a spreadsheet. So let me find my spreadsheet. This is going to calculate the shares for me nice and easy. And these are the current orders. Actually, this one just got hit. So we need to move it over. Into our portfolio. So we have now three things on. And I'll finish setting that up in a moment. So I can get rid of that. So that was pending. So I have two tabs here, one for pending trades, one for trades that are in play. All right, so let's do an order here. Today is 319. And the stock is now. We're going to do now. Today is tomorrow. We're going long. We know exactly where we're going, right? And nice and relaxing, 772.92. Don't let the high price stocks scare you, right? Even if you only buy one share, it's the same thing. And by the way, higher price stocks generally trade smoother than lower price stocks, right? $5 to $10. Those guys get a little squirrely because so many people are trying to make their fortunes. So this is going to be 751.72. So I know exactly everything I'm doing ahead of time. This is going to give me 24 shares. I'm shooting for 6 to 1. And so you see I'm risking 21 points. You could do one share for 21 points if you wanted to. And it's going to take up that much of my portfolio. All right, so 24 shares. So it looks like we're pretty close to being on the money there. And it's going to be a buy stop. So let me just talk a little bit more about, the rules of my method here. We want the market to take us in. If it gaps above it, we don't get filled. It turns into a limit order. We want this level, period. There's no chasing. Every order is regular trading hours. If price makes a new low before it hits our entry, the order's canceled. And that's about it, I think. We're just doing a simple swing trade in an uptrend, right? It's swinging. People got all excited to jump in. And now we're getting in with a very decent risk reward waiting for the market to take us in. So let's send this. So buy stop. Boom, boom, boom. Close that. And you have something you can go and do some practice with in any market. So, right, you're not looking for all the wonky volatility. You're looking for when it gets nice and organized. All right, there we go.